Started here. We have the week starting off so far. It's a shortened day or a shortened week of trading because of the July 4th holiday on Monday. So we have a shortened week. We're at the midpoint so far. And what we have seen consistently these last 2 days is tech rallying, discretionary showing some strength as well. The S&P 500 trailing the Nasdaq 100, and then you have the Russell 2000, which has really been the weaker of the three indices, especially today, because we saw the Russell sell off about 0.8%, while the Nasdaq and the S&P 500 both rallied. We're also seeing breadth in the market. That's basically the net difference of advancing stocks versus declining stocks. So today we saw, for instance, 1,967 stocks decline versus 1,170 stocks advance. So there was almost a 2-to-1 ratio there of declining stocks versus advancing stocks. So despite the fact that the Nasdaq and the S&P 500 was stronger, most of your stocks declined on the day, which is not a good sign of conviction out of these rallies. And it's a tough market because I want to get long or I want to get short. I just want to get something here, but I have to be patient and let the market dictate what that next trade's going to be. And I've just been sitting on my hands. Well, not literally. I mean, I'm still doing tons of research, but in terms of actually placing trades, I've been kind of sitting on my hands here for the last 2 weeks. I'm like, how long can this go on for? I'm ready to pull the trigger on something, but the market has to reveal that to me. Now, I got very close to doing that today, and I'll go over in just a second as to why I did not pull the trigger on a long setup today. But overall, we have the VIX that's showing, a little bit of a malaise or just not really interested in any significant moves. We got that light summer volume kicking in here in the month of July. You have breadth that's a little bit questionable, and you got a mixed picture on the indices between the small caps and the large caps, and that's making it somewhat difficult. But before I forget, make sure to start posting your charts and your questions that you want me to go over in this live stream. We do these things every Wednesday at about 4:30 p.m. Eastern. I take your questions, I take your charts, and we go over all of them until essentially we've gone over every one of them. So they tend to last anywhere from 30 minutes to 45 minutes in length. And I'm here to help you guys and here to provide you with my opinions on matters. I'm not saying they're always going to be right or that I have a crystal ball that can see the future, but I give you my analysis and I give it to you as unbiased as I possibly can. We have today, I'm going to look at a few different indicators that are quite intriguing to me. I'm also going to dissect the S&P 500, the Nasdaq, and go ahead and get into your charts as well. So make sure to be posting those. Also, subscribe to the channel, like it so you can get notified of all my future videos. That helps out tremendously as I continue to expand this channel and try to provide even more cool offerings for you guys down the road. So with that being said, the FOMC minutes came out today. For those of you who don't know, we had a FOMC statement that came out, I don't know, was it 2 or 3 weeks ago? And then a few weeks after that, we come out with the FOMC minutes that basically details how the meeting actually went down. Gives you a little bit more details in the back and forth that was happening between members of the Federal Reserve. And one of the things that we're realizing is that the Federal Reserve is willing to go into restrictive territory with the interest rates. They're willing to create a recession if they have to bring back price stability. They're very much worried about the inflation issue here, and they're willing to really try and get ahead of it. What does that mean? It means that they're more than likely going to ultimately overshoot this. They're going to raise interest rates far too quickly. Are they okay with that? Yes. They even pretty much said that we'd rather go too far than not far enough. So they're going to be more aggressive, I would say, at the next meeting. Expect anywhere between 0.5% to 0.75% of another rate hike. Right now, we're between 1.5% to 1.75% total. So I would expect for me personally, I expect them to raise another 0.75 of a point. I don't think they're willing to lollygag anymore. I think they're embarrassed. I think they missed out on what was obvious to everybody else. They're taking it on the chin. Everybody's being critical. So what are they going to do? They're going to come out swinging. They're going to try to be as aggressive as possible. And that might drive us into a recession. And actually, it probably will. I think the housing market's going to eventually have some major, major problems here. I don't have many doubts about that. So I think that they're willing to increase rates quite a bit here. They're willing to go into restrictive territory. That means we could see, interest rates get up, to around 4% at some point next year. They realize that they screwed up. And one of the biggest things that they're worried about is a change in consumer psychology, where basically and high inflation becomes entrenched in the mindset of consumers and becomes like a self-fulfilling prophecy, essentially, where people are just raising the prices on pretty much everything because they feel like everybody else is doing it and they've got to do it. There's a lot of problems here that they've really got to tackle here, and one of the big things that they have at their disposal, obviously, is the raising the interest rates. The other thing is the quantitative tapering, the QT. They're going to be selling a lot of bonds, up to about $100 billion every month. And right now, I think they're around like 35, but they're trying to build up to that. I wouldn't be surprised to see them get a little bit more aggressive on that front. Also, you have the mortgage-backed securities that they hold, where, if they start selling those, that's going to drive interest rates even higher. That's going to cause mortgage rates to go even higher. So there's a lot of crazy headwinds in this market here. And, it'll be very interesting to see how it starts to play out between now and the end of the year here, where we stand, because could they go aggressive beyond the next meeting and maybe do another half point or even 3/4 of a point? I don't know. I think it's going to depend on how that consumer price index report comes out later this month, how hot it is. And if it's, too hot, then yeah, I think you're going to see them continue to raise rates aggressively. So with that being said, let's look at the Qs. So first off, well, let's start with the SPY here, huh? My main emphasis is going to be on the Qs, but we'll go ahead and knock out the SPY here to start with. So you have this downtrend here, still in place, hasn't broken out of it. Before, I was really looking at this declining support level here, but then we broke below it here a couple of weeks ago. Actually, it was like mid-June. We broke below it. Looks like things were going to get really ugly, and then we popped right back up. So that distorts this support level quite a bit. So then I redrew it, basically taking into account that price action. So, and in doing so, doing away with the lows from February and March, and we're just going to focus more so on the price action from the last 2+ months. That takes us back to May, and you can see there's a bit of a channel right here that's in place. Let's tighten that up a little bit. So the S&P 500 needs to break this declining channel here for it to really have any ability to rally the market in any substantial way. As long as it stays in this declining channel, there's nothing that's really changed in terms of the tune that the market's playing. It's still going to be very bearish going forward. If you can break out of this channel, then you got to watch this massive declining support level overhead, and that's where the real opportunity comes for the bulls. If I can break out of this channel and perhaps make a run back up to this 438 to 440 level, to where enough people are saying, hey, the worst is behind us and everything, and then that's where you really want to start to short the market again. So for the shorts, the best thing that you could have happen, the people who are bearish on this market, is for us to get this massive dead cat bounce like what we saw back in March of this year, have it take us right back up to this declining trend line to where you can reload the short positions, have price fail at the resistance, and come right back down again. Not saying that's going to happen. The market's really struggling to put much together here of late, but that's the ultimate target for a dead cat bounce. However, it wouldn't surprise me if we just managed to get back up to this declining trend line before we started that next leg lower. If we start to struggle there, that's where I want to look to reload some short positions. Now, let's say we never get there. What's the next trigger to get short? I would probably say this little short-term trend line here off of the lows. If we break below that, and we break below this 3-day consolidation pattern right there, then I think there's a good chance that this market's going to retest the lower support level, which could also provide a good reward to the risk taking on for that kind of a trade. Yeah, and I see all those questions coming in. Keep bringing them on. We'll knock them all out. I appreciate every one of those things. So Aaron, too, real quick, just while I'm looking at that question, let me know if are you talking about crude there, or are you talking about Clorox? I think Clorox is CL, right? Yeah, or Colgate palm oil. So let me just clarify that for me on the question, so I know which one to tackle. But back to the SPY. That's the scenarios that I'm looking at here. Overall, you go back to like June 15th. All we have been in is stuck in this chop. There's a reason why I haven't made any new trades here in a couple of weeks, is because we can't go anywhere. We're not moving. We're up 3 days in a row, but what have we actually done? Nothing. We've just rallied off of the intraday lows to just be marginally higher. And Cigna. Okay, thanks, Aaron. But we're sitting on some resistance right here, and that's going to, perhaps be difficult to break through. I don't know yet, but we haven't gone anywhere at all over the last 3+ weeks. Since June 15th, we are just trading sideways here. See? So you want to look at it from an hourly chart. It's even more amplified there. I mean, just there's not much happening here. So that's the problem with this market at this moment. So the Qs, I had 2 trade setups coming into today on the Qs. One was bullish, one was bearish. One was to get short the market, one was to get long on it. And I didn't know which one would ultimately play out, though it was more likely to be the Qs than buying QQQ than buying QID. And why did I do a 1-to-1 to the upside, but do a 2-to-1 to the downside? All it comes down to reward to risk, and I'll talk about that in a second as well. So you have this declining trend line here going back to April or so. The market has bounced off of that to the downside each time it's tested it, and now it's testing it again. It didn't break through it into the close, though, so that's a little bit of a problem. Then you could say, well, we got this bullish we have a bullish wedge pattern that has also formed. Check this one out. Isn't that a beauty? See there? Nice little bullish wedge pattern. So we're looking for the upside breakout, and that was when my one trade setup there, or one of my 2 trade setups coming into the day. We have this bullish wedge breakout, and we got about 10 minutes away from the FOMC minutes coming out, and I said to myself, very close to breaking it. I think I had like an entry price of like 288.80 something. I think 83 maybe. Anyways, it was really close to triggering, but I pulled the trade just because with the FOMC minutes coming out, I could easily see a quick pop up and then it come right back down, and I didn't want to deal with that. I didn't want to get caught into a trade that was only flashing for like 15 seconds to the upside and then wish I never got into it. It actually did that. It just didn't stay like that for very long. But if you look at when the minutes eventually came out, it actually flashed up there. Actually, I pulled it up on the minute chart. You can see it went way up and then came right back down again. So that was what I was trying to avoid. Fortunately, it didn't really. If I would have stayed in it, it wouldn't have ultimately hurt me all that much because it managed to rally even though it sold off at the very end of the day. So that's one trade setup. You know, you put the stop loss below this 3-day consolidation pattern right here, so you can put that. There's a little bit of a consolidation area right there. Breaks that, I don't want to be at it anymore because then it's reversing back to the downside. Right now, you have a little bit of a higher low that's trying to form. So that's the Qs. To the downside, you also had this like almost like a bearish flag that's been forming of late. It's not perfectly parallel levels or anything, but you had this forming, and if you look at SPY, you've had similar bear flags that have formed on the SPY as well. Let me show you there. There's a bear flag, and then we had another one back in June that formed, and it confirmed to the downside as well. So these bear flags have been working. You have one right here, and you have a second one right there. And so really what I'm looking for is for that confirmation to the downside. That's another way to get short on SPY is if we break out of that bear flag to the tune of what we did back in mid-June. That could also happen, cover at around the lower channel band. So on the Qs, same thing. We got a little bit of a bear flag working there. That was where I had QID, which would be a bull flag on QID because QID is the inverse ETF to QQQ by 2-to-1. You have this little bull flag pattern here working. You can get, long on it around 2663 or so. So that's what I'm working with right now in the Qs. Can't get anything to trigger here. I guess I could have gotten into Qs, but with that FOMC minutes, I wasn't willing to risk the volatility that can oftentimes come with it and get a false breakout, and I could have just avoided that trade altogether. Oh, that was a bunch. That was a mouthful. Talked about the FOMC. We talked about the SPY. We talked about the Qs. But what am I drinking, man? This is Brothers Bond. This is actually for an 80 proof bourbon. Really, really good. Very flavorful too, man. But it's got all sorts of good stuff going for it. I think I got this on clearance at Sam's Club, but it's pretty good, 40%. So it's not bad, especially if you're into daytime drinking or something. I'm not. I trade stocks during the day, so I'm not drinking bourbon. But afterwards, I am, like right now. So okay. Now let's look at energy because that's the other sector that's really been dominating our attention of late. So where is this thing going to bottom at? Well, before I draw this one trend line here, let me go ahead and move my face up here. Here we go. So look at this 200-day moving average. That's this big prominent white line here. What you're going to see is a number of times where it's bounced off of this 200-day moving average. I mean, this is September of 2021, bounced there in August, September, multiple times. It does go below it sometimes, but it quickly recovers. You saw it again in December. It tested it perfectly and then went on this epic run where it went from 51 almost up to 100. Now it's testing it again. It went below it intraday, but it did hold into the close there. So that's important. Can it finally put in a bottom there? I mean, look, it's oversold as it can get, man. It doesn't mean it can't stay oversold, but it's quite oversold. And it's been like that for a better part of a month now. It's since June 15th. It's been oversold. But look at this. There's a major trend line. And it's been, for the most part, in conjunction with this 200-day moving average more times than not. So do we see a pullback, let's say, to the 64.46 level? Ultimately, that's what I want to target. I really did. That's what I would look for. If we can pull back, this is the weekly chart. If we can pull back to this like 64.65 level, that could be the place to try and play the bounce off of XLE with a stop loss below this rising trend line. It's getting there fast. I mean, there's nothing to say we won't even see it Thursday or Friday get touched. So very, very fast moves in XLE, but that's what I'm watching right now. As for the VIX, check this sucker out. Still, it's the same thing. So I don't even have to spend much time. We got this resistance level. It's not breaking through it at any time soon. And then you got the series of higher lows. So you got higher low, higher low, higher low, higher low. And we still have a higher low right here, despite some of the low volume rallies that we've seen out of the market of late. It's still holding that higher low. T2108, this is the percentage of stocks trading above their 40-day moving average. So we're at 28.5%. When you get to some really extreme levels, that's when we're getting into single digits. That's oftentimes where you see a lot of bears start aggressively covering their positions. Since then, we've rallied a little bit off of those lows, but we're not seeing substantial progress. Not like what we saw back in early June, where we got all the way up into the 50s. Right now, we're sitting at 28%. March, we got all the way as high as like 65%, almost 70. So very, very weak bounce so far. That's a little bit of a cause for concern as well. It doesn't mean it can't change, and all of a sudden the bulls do find that energy. But right now, we're not seeing a lot of aggressive buying out of the bulls. And then T2107, this is a percentage of stocks trading below their or above their 200-day moving average. Very little movement. In fact, holy crikeys. I don't know why I'm talking Australian or something here with crikeys, but it's really astounding. The lows that were reached back in June, we almost touched them today. I mean, we hit a low of 1286. The lowest that we got in June was the lowest that we've gotten so far this year was 1259. We hit a low of 1286. So that's just showing you, man, the stocks are not really getting much lift. I mean, we got a lift back in May. We got a lift off of March. I mean, March, we got all the way back up to 40% from the 20s. But right now, we are just essentially sitting at these lows. So I don't know, man. It doesn't look like the bulls have a lot of conviction here about this bounce. I mean, when you're looking at the Qs, yeah, I mean, you got this bullish wedge. You think, okay, we break out of this thing. Maybe we get up to this 320. Maybe we can rally through that and get up to this 330. The price action looks good, but some of these freaking indicators look horrendous. So there you go. XLE, we talked about. What's some of the industries that have performed pretty good over the last few weeks? Look at, I have them written down here, XLI. No, not XLI, XLU. I'm sorry, utilities. Look at that. Really good bounce out of utilities. Staples. Really good bounce out of staples as well. See this little bounce here? Good, solid bounce. Again, XLU. Another really nice bounce. Almost 10% at one point. And then you also have XLV, which has put together a really nice rally too. 119 all the way up to 130 pretty much. So that's almost a 10% rally there as well. So 2 to 3 of those are very defensive sectors though. That's staples and utilities. That's where people go when they're scared of the market, not when they're, got a risk on mentality and they're like, hey, let's buy up everything. With that being said, let's start getting into some of your questions here. We have got Alan Hirschberger with the first one here. Carvana. Carvana is going to start us off. CVNA and BIG. Let's look at this one. So you saw some of my chicken scratch there. You can see I've done a lot of chicken scratch on this thing over the years, but this long-term trend line going almost back to its IPO in 2017. Man, it's below that trend line now. And I always hear rumblings that people are worried about its sustainability long-term. So definitely not a stock that I want to stay in long-term, but let's go to the scratch board here. Start a whole new chart. Let's even go to maybe the 30-minute. Maybe we can get a better feel for this price action. So right here, you do have some interesting declining resistance. And that can be seen on the daily too, right? So that's what it looks like on the daily. It's just a little bit more clear on the hourly chart. You could make a claim that if it can get it back above like this 2930 level, that there is some room for it to run. Stop loss is going to be difficult because we're talking even on the intraday chart, a very big stop loss. So 2930, right? Where are you putting the stop loss? Probably somewhere around like 2579. So the reward to risk ratio, it may be a good reward to the upside, but you're having to risk a lot. So if I'm having to risk like 15% in order to get 30%, it's reward to risk ratio wise, that's not bad. But if you're wrong on the trade, it does set you back quite a bit, especially if it's a full position, because 15% is a lot on a trade. I know some people, don't even blink an eye at it. When you're looking at the way I trade, I keep things around like 5% risk, on the stop loss. So CVNA carries a lot of it. So you got to be mindful of that. Yes, there's a potential for even maybe like an inverse head and shoulders pattern here. Left shoulder, massive head, right shoulder, just yet to break out. Big, BIG. Go back to the daily look at this one. Oh, trying to figure out what's going on with this thing. It's been a while since I looked at this one. It's not a key support level there, so we want to make sure that we're being honest with how we're drawing these things. Not just drawing it because we want them to connect. They actually have to connect. But this is a big support level right here below $10. I saw it like 684. Yeah. A couple of weeks ago, or a couple of months ago, we wouldn't think it would be possible for it to get that low, but it's trading at $20 now. It's given up almost 70% of its profits from the highs back in 2021. This is a weekly chart here. On the daily, you got a sustained downtrend fully in place here. So that's not something I really want to get long on, especially with that downtrend, hitting so hard. I can see a reversion to the mean kind of play where it goes back up to 30 short term, especially if we get a market bounce. But right now, it is yet to settle down, and it's still in a free fall. It's just breaking, support level after support level, just not holding on to anything at all. So that's a concern there. How much further is this thing going to finally bounce? Because you can keep trying to buy the dip, but it can keep dipping. The market doesn't care where you buy it at. It's going to settle where it wants to. Let's see here, OVV and oil and gas in general. So we talked about the energy sector. So we've kind of covered that one already. Then you got OVV. Similar charts across the board here. This is very similar to the XLE, in fact, just, eyeballing it here. But you can see 200-day moving average seems to have a little bit of significance in the past. The only problem is it shattered right through it here yesterday. So it's already going back to this longer-term trend line. It's trying to hold it. It's got a downtrend in place going back to the June highs. So that's still intact right there. So it needs to break above that. So if we do get a bounce off of this rising trend line, be very mindful of its declining resistance here, because it could just bounce, hit this, and then crush right below the rising trend line. But yeah, this is a do or die moment for OVV. Can it hold this trend line? If it not, yeah, there's a potential bounce play here for sure. Can it bounce back above 40, for instance, and you put a stop loss maybe below 37.40. And if it can't hold this rising trend line, I don't want to be in it anymore. If it can hold that rising trend line, maybe there's a bounce up to 43. Maybe it can go beyond, maybe go back up to 50. It is oversold. Oil stocks in general, oversold. It's definitely an intriguing bounce play at these levels, but it's also high risk. Justin Biddle, yeah, it was breaking above it, you know, going right into the close. But if you look at it closely, it's actually just sitting right on that resistance level, maybe even a shade below it. So it could still be in play tomorrow. I think if it breaks the highs of today, tomorrow it could be finally be ready to pose a decent chance at a rally. So. Thanks, Aaron, for the compliments on the hat. Yeah, NASA's not too far away from me, so I actually get to see all the rockets that are shooting up all the time. I think we had 2 the other day, just in one day. You had SpaceX and something else. I don't know. You see so many of them, you'll drive down the road and you just see rockets going up. It's crazy. All right, Cigna. Let's look at this one here. CI. Yeah, I had asked him earlier to clarify because I couldn't tell, but it actually wasn't his problem. It's just the way that the capital I's kind of make it, you know, not sure if it's a lowercase L. And so I wasn't sure if he was asking about crude because crude is, you know, on the minds of a lot of people right now. But here you got Cigna, rising trend line. This goes back to 2020, March 2020 lows. This looks like, the question is, where's the breakout level on this? I think this is your breakout level right here. For all intents and purposes, I think it really just needs to get maybe, it's like 272 to 273 seems to be a critical level of resistance right there that it needs to break through. I think the stop loss is probably below like this 256.37 level that was established yesterday. As long as it holds that, it can break out and maintain a move above like 272, 273. I do like the chart. I think it's pretty good looking. There's very few charts that look this good in this kind of a bear market, but Cigna is one of the exceptions. There's a number of healthcare stocks that have actually fared pretty well so far this year that are below the radar. Not a lot of people talking about. Good stuff, man. I need to add that to my watch list. Got it. SoFi. This is the one that I get a lot of hate over. If I post anything that's negative on SoFi on social media, man, people lose their marbles. So I haven't done it in a long time. Maybe I'm due for one. But this declining trend line, it's been pushing back on the stocks for a long time. But if you look today, I mean, look at that. It's kind of sneaking above it here. Is that a sustainable move? I mean, it's one of the best developments the stock's seen in a very long time. This is going to be a pretty testy area for the stock right in here. I mean, you can see it's just a lot of price action. I mean, it goes back actually beyond that. I mean, it goes back to April. Just a lot of choppiness on the charts. So it could get bogged down in this area. Don't be surprised if that happens. Declining trend line. So let me just go back to this here. This is I'm just trying to clean it up a little bit so it looks a little cleaner to you guys. But yeah, this is what's guided my decision making on SoFi. I think it's a very high risk play, especially with it trading under $10. It hasn't always been that way. I mean, it was trading what, $25 just in November. So this thing has seen an 80% pullback. Huge loyal base of investors, though. This is another thing that probably would be a bit concerning for me on SoFi is this descending triangle. Those tend to break to the downside. But you can see it's actually perhaps breaking to the upside, like I mentioned, with this triangle or with the declining trend line starting to break. So if it can hold that into tomorrow and start to build upon it, I think the next major level that it needs to break through is probably this. I would just say 621. Can it break 621? That would be a big deal because it would be breaking the previous highs. Do that, and it might have some momentum starting to take hold there. And that was Lewis Ormeno. So I apologize for not pulling up that one earlier. And then ET was his other question here. ET is an energy play. Like I said, man, oil is on a lot of minds of traders right now. So you have that trend line. That doesn't really look like the kind of trend line I'd want to follow just because it hasn't tested it in quite some time. But look at that. That's a trend line. Similar to OVV, similar to XLE. They're pulling back to some major trend lines right now. And this is another one. The only thing I would say about ET is that the last time it bounced, it didn't form significant new higher highs like what you saw from something like CVX or from like Hess. ET was a little bit more muted. So it broke below it, just like OVB, held it, and then recovered into close and held it. So this one needs to break back to the upside here in short order. As long as it can hold today's lows, you know, it's a potential bounce play. And Aaron's asking about healthcare. I think we talked about it a little bit here. He might have just been clarifying that Cigna was a healthcare stock. But nonetheless, look at that. Breaking right out of that declining trend line. Like I said, I mean, healthcare has been one of the better sectors so far this year, and that's a declining channel. Dang, that looks pretty good. Let's add that one too, just so I'm not losing track of that little development there. That is pretty fancy. Little cup and handle pattern right there. Handle, this is your cup. That's your handle. Not bad at all, man. Not bad. It's flashing, man. Taking a look at T, yeah, big time dividend play. What are we looking at here? Just kind of seeing some of my past markings on this thing. Sometimes it doesn't amount to more than chicken scratch, depending on if I was just, depending on what I was doing with it at the time. But looks like you had a little bit of a breakout here back in May. Couldn't hold it, couldn't sustain it, fell back below. That I don't like. Now, I don't know, man. This one's hard to get a good read on, isn't it? I think this is what you're watching here. You got some resistance going all the way across, going back to 2020. This resistance sits at around 21-ish. So in that whole 21 range is probably where I would consider resistance to be cognizant of. That could bog down the price action. I mean, overall, over the years, it really hasn't gone anywhere. People buy it because they like their dividend. But yeah, thanks for bringing that one up. That's some definite resistance you want to keep in mind. Stay mindful of, KB. Now, Kevin Kopag, what are your thoughts on the biotech crap? IBB. Dude, this chart is definitely intriguing, man. Just like the healthcare stock was. I mean, this thing is this one's also flashing a little bit here, man. This thing has some potential to it. In the trading block, I've been mentioning it. This thing has a double bottom. It has some consolidation. It tried to break out, couldn't do so, and then finally broke out yesterday. Yes, there was a little bit of a pullback today, but that's nothing earth-shattering, really, especially considering the overall price action wasn't that great today or yesterday. But double bottom, man, I like that. You can play it a couple of ways here. I mean, my stop loss would be below June 30th lows. That would be about 115.94. And then ideally, if it can pull back to this like 121 level and then bounce. But I mean, it's so close to it right now anyways. It's like, you know, a little more than 1% away from that breakout level. So it still has a good reward to risk ratio. That declining trend line also broke. So it's really nice. And then let's see. EOG, CRSP, and U. CRSP, I want to say this has been on my watch list a few times of late. I think I was watching that, but really, I mean, we need to redraw this a little bit just to take into account some of the new price developments on it. Inverse head and shoulders pattern there. Left shoulder, head, right shoulder. Tried to break out today. Couldn't hold the breakout. So instead, we get a little bit of a pullback. Really needs to get back above, let's say, like 76.50 or so. Problem with CRISP, it is a massively volatile play. I mean, last 3 days, it's gone from 60 almost up to 80. That's like 30-something% right there. Big swings on it, especially after this massive sell-off that we've seen of late in this stock. Yeah, it's broken that declining trend line, but even this consolidation, it still keeps it a very wide range there. But it's a trade that I would pass up on just because of the risk associated with the trade to the downside. But for those who don't feel like that's risky, I mean, you know, it can get above this like highs of the day today, essentially. That's, I would say, if it gets back up to 77, it becomes a very intriguing breakout play. And then he's got you. Always reminisce about this little run here. That was a fun run when I was in that trade last year. But this declining trend line, it's hitting it. It tried to break out above it, couldn't do so. This goes back to what, November? Mid-November, those all-time highs, and it has since sold off. Let me get a cleaner board here and just redraw it. Needs to get above that trend line. If we can do that, there's some potential there. But even if it breaks above it, then what has become the next level? Then you have this little support level here that it needs to break above. So that's going to be around, 47.50 that it needs to get above. So those are the two things you want to keep in mind with you. I mean, this is also a stock that I could easily see, even though it's on the precipice of trying to break this declining trend line and maybe some support above. It breaks through this support level here at around 34.13. That becomes very bearish for the stock. Let's see, 215 LIL, little 215. I don't know how to say that particular screen name, but BBY. So this huge support level just above 90 was lost, a couple months ago. Since then, it's been in a free fall, really, and hasn't given us much of a reason to get long on it. I mean, it still has this declining trend line in place. Let's see here. No, got that declining trend line in place. I think there's just a lot of overhead resistance on this thing. The lows from June, I could see this easily getting taken out. I just don't see any bullish developments in the stock that makes me feel good about it. It looks much more bearish than anything to me still. And we got Rage TV making an appearance here. He's not liking the RBLX, man. I don't have a position in it. I've got no dog in this fight, but I would point out this. It's kind of interesting to me. You got the breakout, kind of a nice basing pattern too, right? But you got the breakout, and then it pulled back to this breakout level, and it's just kind of like sitting there. So there's a potential that it holds the support level tomorrow and then, cranks back up again and gets back above 40. That's, I would have to assume a lot of people who are charting this ring right now are probably looking at that exact scenario. If that holds, then, that the stop loss will probably be below today's lows, assuming that it can get back above today's highs. Yes, I remember you talking about the AMD, man. It is just absolutely a bloodbath out there. 75 on AMD. Look at this thing, though. It might be finding a little bit of support. I did a video on it. I wasn't very optimistic on it and said that I thought it would probably drop as well. It did. But maybe there's some support here to be found. I mean, it's tested it multiple times in the past. There's definitely something going on there because it is attempting to hold it with everything it's got the last 3 days. In fact, it's tested it and held. So keep that one in mind. You was a trade, if I remember correctly, that Rage is asking. This was one that I don't remember the exact dates on. I remember holding it, I felt like, for like a week or two. And that's usually very long for me to hold on. And I want to say I was underwater on it for a little bit. And then all of a sudden just went on this crazy run right here. This is the run that I got on. And I sold profits along the way. I didn't get out right at the top. I want to say I got out maybe in the 180s, like somewhere around here, maybe with this big candle there. And then it just completely fell apart. I remember even when I got out, I was like, holy cow, it just still keeps going higher. But this was just a beautiful play here. But I want to say that I got in. I'm trying to actually just find the trade setup itself. I want to say this was the trade setup right here. It was probably right here, September timeframe. I think I got long on it. So maybe it was like this. I don't know. It was in this time frame right here, but I was negative on it for a little bit, and then all of a sudden it just reversed. I remember being negative on it without being stopped out for a little bit longer than I would normally be negative on a stock. So APD, I didn't violate any trading rules, and that was the important part. Got a little rising trend line there. That could ultimately just be a big old bear flag, which is what it's kind of setting up to be right there. That's definitely a topping pattern as well. Bear flag. I'd say APD looks more like a play to the downside here. If it breaks this 233 level, that's where I would get much more bearish on this stock. to me, from a bullish standpoint, yeah, it might bounce. It might get back up to 263. That'd be good, but it looks like a lot of chop. And then you got, so that was APD 215 was asking for. And EOG's got another one here. MU long-term chart, 5-year, looks like we're at some major support. Okay, let's look at that one. Going back 5 years, what are we talking about? 2017. I mean, I don't know if it's a clean support level. Let's see here. If we're talking about this rising trend line, I think that might be what I would be focused on right there. That goes back about what, 5-6 years. So that would probably be what I would be watching for on MU. Yeah, I mean, there's some validity to that. I mean, it's holding that trend line so far. I think it's worth following, worth watching. I mean, remember, we're going into earnings season here. MU tends to report later in the season. So, but yeah, you still have that double top in play. Maybe it's finally played out and it's putting together a little bit of a bottom there. I think as long as it holds that rising trend line, yeah, it's a bounce play that can be played. So low of 52.06. Yeah, I mean, it's about a 10% stop loss at this point. This is a weekly chart too, by the way. It won't let me go way back on TC 2000 to 2016 daily candles. Wish it did. That's one of the things I don't like, but overall, it's still an incredible trading platform. Probably the best one out there. But yeah, huge rally yesterday, and that's one that you got to just see if you get another chance to get into it and keep the risk tight. Oh, Rage was asking about not about the style. He was talking about how long it took me. I mean, it's interesting because like going back into the 90s, I was profitable then. I was like in my teenage years, and that was because it was such an easy market, and it gave me a false sense of security. And it was like there's a number of traders, for instance, that started in 2020, 2021, and thought they can do this full time without ever having experienced the bear market before. And now they've lost everything that they own because they didn't know how to manage the risk. They just thought the market always goes up because that's what everybody would say. Always buy the dip, right? It goes right back up. And now they're realizing market can keep dipping after you buy the dip. So for me, I mean, there's definitely been times, especially early on in my trading, I would say there was a couple of years there when I was being more of a swing trader than long-term investor where I was really struggling with the gains. And I think a lot of that went back to I was trading the wrong stuff. I shouldn't have been trading the penny stocks. I shouldn't have been trading these very volatile high beta stocks. Stocks with little to no volume. Those are the kinds of things that keep you from being profitable. And then once I started understanding more and more about what it meant to manage the risk and how everything revolves around in terms of profitability revolves around how you manage the risk. You're only as good as your losing trades. If your losing trades wipe out your profits, you're not a profitable trader. So you've got to keep those losses small, even if sometimes you feel like you're getting stopped out erroneously and you're like, man, I know this thing's going to go right back up, and it does. You still have to stay disciplined on your next trade and not let that affect you and your decision making. So yeah, I mean, I think initially I started off and it was fine. I thought trading was easy as a teenager. I was like, man, I'm gonna be like Bill Gates rich, by the time I graduate high school. And then the .com bubble blew up, and then there was that transition into swing trading, and I had to learn a lot about that and the do's and don'ts. But yeah, I would say probably 4, 5, 6 years. But I didn't have a mentor. YouTube didn't have the kind of content that you're like seeing right now, where you're talking to a live trader essentially, and getting his experiences and answering questions. If I would have had that back in the day, man, I would have had a bazillion questions for that person. The little 215 tells us what 215 is about. That's the Philly area code. Well, I'm glad the charts that he was asking about were potential shorts because some of them were not too hot. All right, guys. So good stuff here today, man. I always appreciate you guys providing me with the Q&A. Like I said, I mean, Cigna, I'm watching that one now. I'm watching MU. I'm watching XLV. I mean, these are charts that I've looked at XLV, but in fact, I looked at it today, but until somebody really mentioned it from a trading standpoint, did I really consider it from that angle? But yeah, I'm glad you guys brought that up and I got to look at it, and that these things benefit me just like I hope they benefit you. Just being able to get a different read on the market from somebody else that's staring at computer screens all day. This is what I do. I love to do it. And again, I'm getting a little frustrated with this market, and it's not because I'm losing money on it. It's just because I just feel like I haven't made any trades lately. And I talk about patience. In fact, the last video I did, 5 things that I've learned so far in 2022 that's really served me well is how important the patience is in a bear market. And that's probably been one of the things that I've done the best at. But man, it's really, really tiresome. Like it killed me to pull the trade on that QQQ setup today. I mean, I didn't want to do it. I just felt like if I'm going to really be a manager of risk, I need to go ahead and pull it. It's just some things like that just drive me nuts. And so I got to wait for the market to decide. These periods of consolidation, they're really trying, they're really taxing, but at the end, it's worth the wait. So trading's not easy. If it was, everybody would be doing it, right? Isn't that what like our parents used to tell us? It's so easy, everybody would be doing it. What we have to do as traders is simply just be persistent, fight through some of these times where it might be really slow, might be boring. That's why I talk about having a side gig is really, really important. Not that you have to it's just as swing traders, it can get kind of quiet, and right now I feel like it's like that for me. Luckily, what I enjoy doing most is charts. So I'm doing these videos with you guys. And so even when it is kind of dull in the market, I still have all this other stuff going on with the podcast and everything else. So with that being said, I hope you guys enjoyed this video. Make sure to like and subscribe to the channel and click the join button down below so you can get some of my stock market research that I provide you guys with each and every day through the membership. And it's great stuff. I'll leave it at that. And I'll be back next week doing another one of these live streams. And in the meantime, keep an eye out for my videos. So take care, guys. God bless.